Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, December 12th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. So as you know, perhaps better than anyone, Japanese life insurance companies recently released results for the second half of the fiscal year, and there was some pretty interesting stuff in there. In fact, you put out a JPY cross-asset piece on that exact topic last week. Why don't we open the podcast with the key takeaways of that piece for our listeners, in particular how it with regards to hedging, foreign bond positions, hedging foreign bond positions, that sort of thing.
Japanese life overall reported lower base profit in the first half of fiscal year 2022 earnings. At earnings briefings, management noted a sharp increase in death payments and hospitalization payouts related to COVID. Insurance payouts for at-home recuperation in lieu of hospitalization for the coronavirus rose sharply, squeezing the base profit for Japanese lifers. Also, there were many concerns voiced about management system and market structure issues, including foreign currency insurance liability reserves and currency hedging, yen basis costs for foreign currency assets. Japan's major life insurance companies held 186 trillion yen on marketable assets, down negative 2.8% year-over-year in fiscal year 2022. These included 79 trillion yen, up 2% year-over-year of JGBs, 13 trillion yen, down 3.5% year-over-year of domestic corporate bonds, 44 trillion yen, down 10% year-over-year of foreign bonds, 18 trillion yen, up 14.2% year-over-year of foreign stocks, and 21 trillion yen, down 5.9% year-over-year of Japan stocks. In the first half of the fiscal year 2022, lifers hedged 68% of their marketable securities portfolios for the currency risk, currency exchange contract, and currency swaps, up from 64% at end fiscal year 2021, including 56% for dollar and 112% for euro. In the first half, fiscal year 2022, lifers faced dollar-yen hedging cost rising as U.S. rates rose, suggesting that they began to review their bond and currency hedging overall in holding traditional marketable securities. Lifers sold outsized European bonds as currency hedging cost increased, as euro-yen forward discount sharply expanded.
Yeah, interesting. I mean, to some extent, interesting that they increased their hedge ratios with hedging costs, going up. And particularly interesting that their hedging ratio, if you will, was over one for euro investments. So there's a lot here. So I guess the follow-up question is, what are the takeaways of these changes? Just in general, as well as in particular, what they suggest for lifer activity in fiscal year 2023.
Okay. In the first half of the fiscal year 2022, Japanese lifers firstly unloaded foreign bonds quickly, and secondly, they increased their JGB holdings, and third, extended the duration of the yen basis hedges and increased hedging ratio via net selling of foreign bonds. Management of lifers are keenly aware of that foreign currency hedging costs. Over the near term, lifers will select which assets to use for liability reserves and consider how to allocate their assets. As yen basis expands, we expect them to choose more higher yield and longer duration assets with medium to long-term yen basis, by case mixing in non-marketable assets. In January to March 2023, nearing the end of the fiscal year 2022, lifers will have more room to invest after selling foreign bonds, and they may actively invest. We will have to continue watching any changes investing behavior amongst lifers through the end of the fiscal year 2022. In the second half of the fiscal year 2022, we expect the Japanese lifers to adjust durations and vary their assets as they mix JGB and credit through foreign stock and investment funds instruments, and a focus increasingly on yield to ensure base profit.
Yeah, well, with lifers selling just a huge amount of foreign bonds over the course of the year, I think I was looking and they sold, foreign bonds in 9 of 11 months so far calendar year to date. They sure have freed up some room to make some moves, whether they do return to the foreign bond market or not, obviously remains an open question. So on a related note, but for different source, the Japanese Ministry of Finance recently released the November International Transaction and Securities data. Always good information in this release, but staying on the theme of lifers in particular, the data showed that Japanese life insurance companies sold a record amount of foreign bonds for the second month in a row. Tell our listeners a little bit more, and also what other Japanese investors were up to in foreign bond markets, as well as a little about foreign investor activity in the JGB market.
Japanese investors continue to net sell foreign securities in November by 2.7 trillion yen, according to the data released on December 8th by the Minister of Finance. This included unloading of foreign stock and investment fund holdings by 1.3 trillion yen, medium to long-term foreign bonds by 1 trillion yen, and short-term foreign bonds by 231 billion yen. Amongst Japanese net sellers of medium to long-term foreign bonds, lifers stood out at 1.9 trillion yen, while pension funds, trust banks net bought 900 billion yen, pension funds 1.7 trillion yen, and Japanese banks 487 billion yen were net sellers of foreign stock and investment fund holdings, while retail investors using the Toshin Trust 440 billion yen and the securities companies 165 billion yen and lifers 111 billion yen were net buyers. Also, in November, foreigners turned net buyers of Japanese securities by 2.4 trillion yen, mainly from net buying of medium to long-term yen bonds by 1.4 trillion yen. Japan stocks and investment fund holdings by 851 billion yen and short-term yen bonds by 80 billion yen. In November, lifers selling of foreign bonds picked up even further. Secondly, pension funds shifted from foreign stocks to foreign bonds. And third, foreigners rebuilt their JGB and Japan stock holdings.
Well, I was gonna try and summarize things there, but you summarized it pretty nicely. So lifers sold foreign bonds, pension box rotated from foreign stocks to foreign bonds, and foreigners rebuilt both JGB and Japan stock holdings.
Right.
Okay, got it. So let's wrap things up, with your outlook going forward across various markets, yen rate, spot dollar yen, and yen basis.
The easing of tight zero-COVID measures in China and imposed a U.S. estimate data that propelled the stronger dollar and the yen ahead of the Fed's December propelled the stronger dollar and the yen selling. Out of the Fed's December meeting, lower U.S. rates could weigh on dollar yen. Over the near term, we revised our view of the bias for dollar yen from bearish to neutral, with trading range between 135 to 138. and we'll be watching any changes in December FOMC's policy stance. The yen swap rate curve is flattened. The Ministry of Finance will hold a liquidity supply auction 5 to 15.5 year on December 13th. After that, investor attention will likely turn to the 20-year JGB auction on December 15th. The BOJ's December Takahiro survey due out December 14th may impact JGB rates, but investors will likely take a wait-and-see stance out of the monetary policy board meeting on December 19th to 20th. We continue to see a neutral bias for yen rates. The yen basis curve has widened. Weekly data from the Ministry of Finance shows that Japanese investors turned the net buy of the following securities in the week of November 27th to December 3rd by 902 billion yen. This included net buying by 618 billion yen of foreign stocks and investment fund holdings and by 522 billion yen of medium to long-term foreign bonds against net selling by 237 billion yen of short-term foreign bonds. Japanese investors may have rebuilt their foreign bond positions in response to yen basis tightening. Also, over the same week, foreigners net bought 645 billion yen of Japanese securities, including short-term yen bonds by a net 2 trillion yen, while net selling 1.1 trillion yen of medium to long-term yen bonds and 349 billion yen of Japan stocks and investment fund holdings. Foreigners have rebuilt their TDB holdings. Looking ahead, foreigners will likely return to JGBs if yen basis widens. In contrast, Japanese investors will likely change their asset portfolio structures only gradually as they continue to review foreign bond investment. We now see a neutral rather than a tightening bias for yen basis.
All right, so a couple things I found interesting there. So, first off, highlight this week in Japan is obviously the release of the December Tonkin survey. That comes before next week's BOJ meeting. You also mentioned, how Japanese investors turned net buyers of foreign securities, over the week through December 3rd. Particularly interesting in the context of all that selling that we talked about earlier in the episode. And then also find it interesting that you mentioned that Japanese investors will only likely change their asset portfolio structures gradually as they review foreign bond investments. So, so sounds like after all this selling, there's room for them to buy, but it really sounds like you're saying it's an open question if they will, which is I think a key point for me and for our listeners.
Yes. Yeah. Thank you.
Yeah. Well, great stuff as always, Sekido-san. Thanks for coming on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.